Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. So Mullen has been a very exciting stock to cover over the past few months, with a high volatility that provides opportunity and also some ongoing projects and non-stopping news that might fuel the speculations in the month and years to come. Now, at the same time, it's also sometimes like a company that has a hard time proving to people that it is a serious company that needs their money for the long-term investment. So in this video, we're going to go through the latest fundamentals, the price actions, my analysis and recommendation about if you should be buying Mullen in the current market. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. So before we go in the video, I'd just like to make a brief disclaimer about what this video is about and what it's not. What is presented in this video are going to be my opinion and interpretations on how things are and will be. They're not investment advice and should be watched for entertainment purposes. They might be able to help you to make more educated decisions, but they shouldn't be used as the only material to base the decision on. Most of the analysis is done right before it's uploaded to YouTube, and the price action sometimes might be different by the time you see it. Regardless, since we're not doing day trading, the trend analysis can still be relatively relevant depending on when you watch them. So for example, we might cover the stock for the weeks to come, or the tendencies that's going to be relevant for the days ahead of us. So the analysis will try to cover the stock as comprehensively as possible, and it's going to talk about more factors than just the latest news or the price actions. So we might talk about the financials, the stock market trends, and the long-term perspectives. These factors are all going to affect if you want to buy the shares, how many shares you want to buy, and at which kind of price action. So with that being said, let's jump into it. Mullen operates in the EV manufacturing, distribution, and marketing sector. It's a holding company for several brands that they have bought over the years. This is not, of course, the first iteration of Mullen. They have been around in this sector since, the early 2000s. So the question is whether they have the means to stay in the game, because the sector has been known to be highly capital intensive and relies on certain sectors that they themselves have yet to grow. So these are the long-term challenges to keep people interested in putting their money into Mullen. And another source of distrust, to be honest, lies with the management. The CEO currently has a track record of a hustler more than an entrepreneur and an innovator. He has been able to squeeze out as much value from the company as possible, and the control of the company is in the hands of his friends or associates. Of course, these are sometimes just speculations, but I believe that when there's smoke, there's usually fire. For additional details, you may take a look at Hindenburg Research's opinion on Mullen back in April of 2022. Of course, it doesn't mean that what they say is necessarily true, but it should be used as an additional element to consider in your decision making. Over the past few days, Mullen has been through a rough patch in the stock market. The price has been going as low as 19 cents, but today, the price has jumped back up to 26 cents at closing. And this is very significant because we've been previously saying that, if the price goes above 25 cents, this is a confirmation that the bulls have reunited once again. And it seems like nowadays this scenario has happened, and we should, make our conclusion from it. This is probably on a fundamental level as a result of the recent, good news, if you will, or good announcements from the company that they would start having partnerships with, charging companies, or that they're going to start deliver for others. These are just announcements for now, but sometimes with a penny stock like this, it might be enough. So we don't run on much, I'll give you that. But the price action sometimes is the only thing that we absolutely need. The rest is more like the excuse that we give ourselves to make our decision. Regarding the long-term price actions, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, trading between $5 to $10, jumping to a peak of $15 before going to the penny stock level that it is now. So what this tells us is that Mullen has been very hard hit by the market volatility and that its own fundamental weaknesses don't help. Now, the management tried to change this assessment recently, but in my opinion, it's not enough. So right now, this stock is still good for trading, but I wouldn't recommend to put your money in for investment. That being said, of course, with things moving that fast in this field, it's always possible that in a few months, in a few years, it might be good for trading then, but it's not the case at the moment. So the online communities have been very skeptical about Mullen and hopeful at the same time. I doubt that they're the same crowd, but usually, with penny stocks, people are very reactive when it comes to any sort of piece of news that may jolt the demand back up. So I would say that Mullen is having the kind of online coverage that it deserves to have. In fact, maybe slightly more, just because it is in the EV sector. It is a company that used to have a much higher market cap. So this is why people are covering it a bit more than, your typical 20 cents shares. So recently, the CEO announcements gave some steam in the stock. With that being said, is that going to be enough? That is quite another discussion. I think that it's not going to last very long, but for the time being, it has broken the previous cycle of sell-offs. So regarding the macroeconomic trends, I would say that the sector has been under pressure for several reasons, namely the interest rates, the capital flights, the conflicts around the world, the supply chain issues, and the expectation that there will be a recession in the world, just delayed by the lockdowns and the government interventions. Another factor to look at would be how Tesla is doing. Now, the EV sector is relatively new, and a lot of people determine if they want to put their money into this sector by looking at how is Tesla performing. If they're going from one historical high to another historical high, then it's not even a question. They're just going to throw their money to the sector. The idea being to profit from a sector-wide gravy train conducted by Tesla that pulls the rest. We have seen that from time to time, companies' price dynamics, they're very similar one from the other. NIO, Lucid, Mullen, and so on. Of course, Mullen doesn't always follow the same trend. This has played in its favor at times, but we have to be mindful that those factors will also paint the surrounding environment in a specific direction. Currently, it is down. With that being said, let's also take a look at Mullen's fundamentals, and let's see what they can tell us. So the company's cash balance has decreased, even though I don't currently see some immediate major issues. I think that it's only a matter of time before we're going to see additional dilutions. And this has more to do with the company's own operations that don't bring in a single penny of revenue as of yet. We might see a different picture by the time the Q4 comes out. The reason why cash balance is relevant is to examine whether they have enough to fulfill the short-term obligations. If not, they either go bankrupt, they either go through the liquidations, or they have to dilute the shareholders or take on debt to have cash in order to pay for those things that will come due. So the liabilities of Mullen have been decreased by $13 million. Generally speaking, that should be a good thing, right? But the market didn't really care, and I feel like they're not going to care as long as the profitability isn't up. The last element to look at would be the profitability, which is 0 for the moment. This is the main reason, in my opinion, why Mullen has remained a stock below $1. And this is why a lot of people don't necessarily trust this company to be profitable ever. Of course, this is a bit unfair because, every single company has to have this kind of phase where they have to bring in money in order to kickstart their operations. Mullen wasn't there yet. Okay, it doesn't mean that they're never going to be able to do it. But for the time being, I can see that investors are clearly losing trust in the long term for Mullen. It doesn't mean that they're losing trust in the short term, though. So, in my opinion, we should expect to see Mullen eventually going through additional dilutions, like I said before, just because this is the least risky method for the company to stay afloat. And if NASDAQ comes in and be like, you're going to be delisted if the stock price keeps to be that low, then they're just going to reverse stock split in order to mechanically push back the price above $1. So overall, the financials show us that the company wants to stay afloat, is willing to, and sometimes is capable of controlling its costs. But the company has to increase its capacity to bring in more revenue, which is what it's supposed to do at the moment, with the IGO distribution, different partnerships, this and that, which will hopefully be able to see on the subsequent quarterly results. Now, of course, needless to say, the shareholders of Mullen are mostly retail, just like you and me. This makes Mullen a very reactive and very volatile stock to trade. And this is why, for me, if you want, the best way to approach Mullen is currently to just trade the stock and not to invest in it, because I haven't seen enough to justify an investment just yet. Of course, we have all read the news saying that BlackRock has increased their holdings in Mullen, but this is just one out of so many. And BlackRock, being one of the world's most diversified portfolio managers, whether the fact that they've put in 0.1% of their holdings into Mullen, I don't know how much I don't know how much of a trust this shows in the company, to be honest. So my assessment remains the same for the time being. At the same time, the lack of significant institutional participation also means that I don't see any real trust on the institutional side. Not that it's always required, but it's always good to see that there are players who are willing to tough it out and to look at the long term. Like right now, I don't think that anyone is really looking at the long term unless they're having a contrarian position. In other words, yes, everything is bad, but you think that at some point things are going to be evolving in a different environment, so you want to position the chips early, right? So you would have to ignore the fundamentals and the short-term future to look at the long-term future. Now, if everyone is saying, well, everything is going to be very bad, that, everyone tends to be wrong. And then you put in a contrarian position. This is also viable as long as the exposure is controlled and rigorously controlled in case of Mullen. Of course, another major catalyst for Mullen is the significant size of the short positions for a short squeeze. In other words, if people buy back their shares to redeem them and give back to the brokers, this acts as a massive buy and would push the stock to much higher price levels. At the current stage, I would say that the shorts have more than enough reasons to stay short. If the stock goes above $1, we might see this kind of movement to really build up. With that being said, we must always be aware that sometimes the institutional side like, especially when you see a lot of short positions, it's possible that the institutions are the ones behind it. Sometimes there are things that you're not expected to see that may happen behind the scenes, like synthetic shares, so on and so forth. Like, there are plenty of ways to mitigate the risk of the stock going up when you have a short positions, and when you have access to like brokers and market makers that are that offer like a far more extensive set of services than our brokers from like the retail perspective. So with all that being said, my overall recommendation about Mullen is to buy. If Mullen can like hold the price action above 25 cents to 30 cents till the end of this week. So by next week, if the situation still maintains itself, I think that it would be a decent entry point. The assumption, of course, is that the price action would be able to sustain itself and to have enough steam to go beyond, like, probably like above 50 cents level. And then that would be like another signal for the market to buy in. I think that this is gonna, like, this is how things are gonna go. Of course, I would recommend to control the exposure below 1% of your portfolio, and like the profit margin should be between 30 to 50% of your cost.